Thank you for taking a moment to learn more about the Bank Secrecy Act, Anti-Money Laundering, and OFAC. In 1970, Congress passed the Financial Record Keeping and Reporting of Currency and Foreign Transactions Act of 1970, commonly known as the Bank Secrecy Act, or BSA. The purpose of BSA is to require U.S. financial institutions to maintain appropriate records and file certain reports involving transactions and customer relationships. BSA was originally intended to aid investigations into an array of criminal activities including tax evasion and money laundering. Since 1970, the government has enacted several laws to enhance the existing BSA framework and combat money laundering. Most notably, the USA Patriot Act that was enacted by Congress in response to the September 11, 2001 terrorist attacks on the United States. Today, BSA requires banks or other financial institutions to detect and prevent money laundering, terrorist financing, fraud, tax evasion, or other criminal activities. But what exactly is money laundering? Money laundering is the process of making illegally gained proceeds appear legal. Although money laundering is a diverse and often complex process, money laundering generally occurs in three more basic stages: placement, layering, and integration. The objective of placement is to introduce the unlawful proceeds into the financial system without attracting the attention of financial institutions or law enforcement. Some placement techniques include structuring to evade reporting requirements and commingling legal and illegal funds. The objective of layering is to create confusion and complicate the paper trail. Layering is often done in a series of complex transactions. The culmination and ultimate goal of money laundering is integration. The integration stage is used to create the appearance of legality through additional transactions to provide a plausible explanation for the source of the funds. In an effort to combat money laundering, here are some examples of red flags to look for: large down payments or unusually large deposits on bank statements, multiple aliases on a credit report not related to marriage or divorce, occupations or ages that are not consistent with income, debt, assets, or down payment, a questionable down payment source or cash out refinance being sought after a recent purchase, and even the applicant's refusal or reluctance to proceed with a transaction, provide requested information, or abruptly withdrawing from the transaction may be a red flag. Now, let's talk about fraud. Fraud includes lying on tax forms, loan applications, or any documents giving a false indication of a person's actual worth or identity, or any other falsified information on a loan. Here are some examples of fraud red flags: multiple applicants in a short time period with W-2 forms from the same employer, multiple W-2 forms that have identical or nearly identical income and withholding amounts, W-2 forms that differ from others from the same employer, as well as W-2 forms that appear altered, W-2 forms with unusually high withholding, W-2 forms that list a post office box for the address, identification documents that appear counterfeit, and multiple tax refunds direct deposited in the same accounts. The loan process can be used to launder money and shelter other illegal activities. The following are signs of potential red flags that will need to be looked out for. The down payment used for the loan is from a source that the applicant will not disclose. The applicant is reluctant to give information needed for the application. There are unusually large deposits on the applicant's bank statements or multiple even-numbered deposits under $10,000, such as $5,000 or $8,000. A cash-out refinance is being sought after a fairly recent purchase. The applicant has a lack of concern regarding risk, commissions, or other transactions. In the event that suspicious activity is uncovered, the activity will be reviewed, researched, and investigated by the Financial Investigations Unit. If it is suspected or known of, a SAR, or Suspicious Activity Report, is filed with the U.S. Department of the Treasury Financial Crimes Enforcement Network, also known as FinCEN. Every SAR must be kept confidential. In addition to BSA AML compliance, financial institutions must also abide by rules established by the Office of Foreign Assets Control, also known as OFAC. OFAC is an office of the U.S. Treasury and administers and oversees a series of laws that impose economic sanctions against hostile targets in an effort to further United States foreign policy and national security objectives. In general, the regulations that OFAC administers require financial institutions to prohibit or block financial transactions with specified countries, entities, or individuals, and report all blocked or rejected transactions to OFAC. Violations of BSA AML requirements may result in severe civil and/or criminal penalties. BSA AML requirements must be strictly complied with. If you identify suspicious activity, you can report it at www.uwm.com/report-suspicious-activity. Thanks for watching.